So in this video, we will go through the fraud detection scenarios, mainly from a bank's fraud management solution perspective. So let's recap. A fraudster might be interested in defrauding the bank for bank's money, and it normally happens in some kind of borrowing. Or fraudster might be interested in stealing customers' money, and that requires getting access to the credential of the account and then transfer the money. And this could be done either alone by the fraudster, or bank employee also might be helping fraudster. So in this particular video, we are going to focus mainly on customer money related fraud because the bank money related fraud is mostly not real-time transaction. So once a fraudster has access to the customer's account, then he can withdraw cash from ATM, right? Or he can transfer money to another account. I'm using he here, but it could be either a man or a woman, but for simplicity, I'll be using he as a fraudster. Or the fraudster could spend that money either online or offline. In online, it could be, buying stuff from e-commerce website, or sending money to crypto exchange, buying crypto, or sending money to casino, those kind of places, or offline purchasing through swiping the card on a POS machine. And the fraudster could be in the same country as the customer, or fraudster could be in a different country. Let's look at when fraudster is going to transfer money from the customer's account, then which account fraudster would transfer. So it would be either to a mule account or to a synthetic mule account. Now, what is a mule account? Mule account is account of those people who have no real money as such. Maybe, college students or elderly people. They don't have their money, and for a small favor or benefit from the fraudster, they open bank account in their name and then give access to the fraudster. So fraudster will start using that account to transfer money from the account where he is committing fraud, right? Because finally fraudster doesn't want his identity to be revealed and get caught, right? So fraudster, they need mule account to transfer money, and that's how they can remain hidden. So either it will be a mule account where mule identity is well known, or it could be synthetic mule account where the partial identity is true and partial identity has been through fake documents. So mule account is important in terms of fraud detection. Another kind of fraud happens through social engineering. So in this kind of fraud, victim would receive a call or an email which will say that you have won a lottery of a big amount. And victim just needs to transfer some money for all the processing work, paperwork, which needs to be done before the amount will be credited to the victim's account. So victim will transfer that money to the fraudster, and then fraudster will be gone. Or it could be a fraudster who is calling and appearing as a bank officer saying your loan has been sanctioned and you just need to pay the loan processing fee before the loan can be disbursed to you. So the victim will transfer the loan processing fee to the fraudster, and fraudster will run away. Or fraudster would appear as an income tax officer and say that you are hiding your income, you are not paying tax properly, and income tax is going to freeze your bank account, you will lose all your money, and if you want to avoid all this, transfer this much money to this account. Or it could be a fraudster who is claiming that I'm calling from this court and non-bailable warrant has been issued against you for this particular crime, and if you want to avoid that, then transfer money to this account. Or fraudster could appear as a friend of your family member, maybe friend of your son or daughter or wife, and call you saying that your family member has met with an accident and there is an emergency. Operation needs to be done then and there, and you need to transfer this money. Or it could be a romance-based scam where our victim meets someone in a social media platform of a person of opposite sex and falls in love. And after some time, that person starts demanding money, and this person being in love starts transferring money to that person, and after some time that person, that fraudster, runs away. So all these are also a variation of fraud, and common thing here is the fraudster is playing with the emotion. Fraudster is basically triggering a particular emotion of, let's say, fear, authority-based fear, okay? Or triggering emotion of greed that you won a lottery. So we human beings, we are powerless against our emotions. Once emotions are triggered, then we become powerless in terms of choosing, and we end up doing what the other person wants. So that's why it is called social engineering. So it is the events are being engineered to trigger emotions so that fraudster can demand money. And again, in this case also, fraudster could be in the same country or could be in a different country. So these type of payments are called APP, authorized push payment, because the payment transfer which is happening here is actually done by the customer himself. It's not like a case of where fraudster has taken over the account or got access to the credential of account. And all these transactions are finally real-time transactions. If you want to really um, stop this fraud, then you have to detect it real time before they get authorized. So let's look at fraud detection scenarios. All fraud detection scenarios can be categorized into these categories. The first one is ATO, which is account takeover, where fraudster is taking over the account by getting access credential. The second category of scenario is transaction fraud, where based on the transaction features, we are trying to detect whether it's a potential fraud. The third is card fraud, where the card number and card details are stolen, and they are being used either online or offline by fraudster. The next category is the ATM fraud. So again, it's a debit card kind of fraud where debit card is stolen, and money is being withdrawn. The next category is mule detection. So bank would like to identify mule accounts, and that's more like a preventive measure. New account related fraud. If a new account is being opened and we are able to detect potential fraudulent intention, then again it's a preventive measure. The next is social engineering scam related scenario, where we are trying to detect social engineering scam. And the last category is employee fraud. So in some cases, employee might be helping the fraudster in committing the fraud. So we will basically look at suspicious activities, because first, individual activities, we need to identify whether it's suspicious or not. And then these suspicious activities, one or more suspicious activities together, based on defined threshold, they form a scenario in most cases. We'll see an example of that later, but let's first look at different types of suspicious activities which fraud management solution should be able to detect. So for example, if we detect that there is a change, customer account mobile number has changed or email address has changed recently, and then a new pay has been added and money is being transferred. So this is a potential suspicious activity, because fraudster might have changed somehow the email address or mobile number, and if successful, then the OTP will come to that mobile or email address and new pay is being added. So it's a suspicious activity. The second category is not category. The second example of suspicious activity is SIM swap followed by transfer of money. So what is SIM swap? In SIM swap, what happens is your mobile number is same, but the SIM card has been changed. So we can actually go to our mobile operator, whether it's Jio or Airtel or Vodafone, and we can request that my mobile has been damaged or it's stolen, and please issue me a new SIM card for the same number. So they'll give you a new SIM and your number will remain same. But that SIM swap activity gets identified by the fraud management solution by some indicator. And if there is a SIM swap and immediately after that money is being transferred, especially to a new payee, then it becomes suspicious. Similarly, if a password has been recently reset and immediately after that you have a high value payment transfer happening, or a dormant account where there was no transaction from last 2 years, suddenly it has a lot of activities in a single day, it becomes suspicious. Or if there is a sudden change in device fingerprint. So device fingerprint is basically how bank identifies the device which is used by the customer, whether it's mobile phone or laptop through which account is accessed. If the fingerprint has changed, so fingerprint consists of what? It could be device number plus IP address plus your mobile operator or your internet provider and geolocation. So these 4 or 5 attributes in combination, they become fingerprint. They uniquely identify the device. And if it has changed, an account is being used, then it is a potential case of fraud. So these are the examples where it appears that the account is being taken over by the fraudster. The next set is um, transaction related scenarios, right? So if there is a sudden spike in transaction amount, so customer normally does transaction of 10,000, 15,000, and suddenly you see 50,000, 75,000, there is a significant spike in the transaction amount. Or if there is a velocity breach, too many transactions are happening in a very short period of time, which is very unusual for that customer. Or if transactions are happening at very odd, unusual hours. Normally customer is doing transaction. Normally customer has done transaction during daytime, and now you see, night 2 o'clock, there is a transfer happening. Another example is rapid balance depletion. So individual transaction may not be a big amount, but you see that within 30 minutes, the account has gone down by 50% or 70%. account balance, I mean. Or if there is a cross-border transfer happening, which is inconsistent with profile. So customer profile doesn't suggest any kind of payment transfer outside the country. So these are example of suspicious activities which we should be able to detect in the fraud management solution. The next example is of card fraud. So what has happened here is the card is stolen and the fraudster either has a physical card or has the card number and CVV number and other details of the cards. So if there are multiple declined transactions at different merchants, it becomes suspicious in nature. Why? Because the fraudster doesn't have all the information related to what all validation would be asked before payment transfer will be approved. Whether it will ask for PIN, whether there will be a OTP, and what is the limit of transaction amount, right? So the fraudster will try at one merchant place, it will get declined, then he will go immediately to the next merchant place and then to the third one. So within very short period of time, there'll be a merchant hopping. Second could be high risk merchant category use. The payment transfer is happening to high risk merchant. That is suspicious. Third is card not present transaction anomalies. So many transactions can be done using card where you don't need physical card. For example, when we make a payment online, then we simply enter the card number and we don't need to have physical card, right? So those transactions become little more risky. Or if transaction is happening from a geographically impossible locations or very remote possible location. For example, someone staying in India and bank detects a transaction happening in Russia. So that is suspicious. If there is a small test transaction, maybe very small amount, maybe 100 rupee or 150 rupee, and then immediately after that, once small transaction amount is successfully transferred, and after that there is a large amount, then it becomes suspicious because the rightful owner, rightful customer knows that this is my account, this is my card, and it has this much of limit. So you rarely do a small test transaction at a merchant place. The next is international usage without prior travel pattern. So suddenly if there is an international usage happening outside the country, then it becomes suspicious. So next category is ATM or cash scenarios. So if ATM withdrawal pattern changes, the customer normally withdraws very small amount, let's say 1,500, 2,000, 2,500, and suddenly you see the withdrawal happening for 15,000 or 25,000, which is the maximum limit for that card, then it becomes suspicious. Or withdrawal is happening at multiple ATMs in a very short period of time. So if a genuine customer is there, then he or she will try to withdraw from the same ATM. Or if ATM usage outside normal geography. So you are staying in Bombay and all the time you have been withdrawing money somewhere in Bombay, and suddenly there is a ATM withdrawal happens in some remote place of Bihar, then it becomes suspicious activity. The next is withdrawal attempts after card reissue. So whenever a card is reissued, the initial transactions after that should be watched for potential suspicious activity, because it could be that fraudster has requested that card. Or if there is a nighttime ATM activity which is inconsistent with profile, like midnight, you are seeing that someone is withdrawing cash from ATM. It becomes suspicious. The next category is mule detection. So bank proactively would like to know which are suspicious account, which could be mule account, which will be misused by the fraudster, or which are being misused by fraudster. So if there is an account where there is a high inflow followed by immediate outflow, the money is coming and going, which is unusual for a normal customer. If there is a round tripping pattern, the money moves from account A to B to C, then D, and then again comes back to A. So that becomes suspicious because money is just rotating. It is not being spent in a useful economic activity. Or if there are multiple unrelated inbound transfer. So if there is a normal customer, the incoming money will be limited to few sources. It could be salary, then maybe few transfer from, family members, maybe few transfer from one or two friends. But if there are unrelated transfer, inbound transfer, then it becomes suspicious because that's unusual. Or if we find that same device or IP is being used across multiple accounts. So if same mobile phone or a laptop is being used to access 10 different accounts owned by 10 different people who are not related to each other, then it's possible that those 10 accounts might be mule account. And if there is a newly opened account with high transaction velocity, then that also is a suspicious activity, because whenever we open a new account in normal circumstances, we don't immediately start using it in a very heavy manner. Next is new account fraud. So when a new account is being opened, at that time bank needs to check for whether a fraudster is trying to open that account, right? So if it is detected that multiple applications for account opening have come from a single device, that becomes suspicious. Or if there are frequent KYC retries or document resubmission, if KYC is being unsuccessful multiple times and multiple times those documents are getting resubmitted, that is a potential suspicious account opening. Or if the use of emails are disposable emails. Disposable emails means the email ID is something like xyz12345@gmail.com. So normally people have their name, some people even have their year of birth, right? So the email ID which is used for official purpose normally relates to the identity of the person. If identity is hidden, it is not coming out, then it becomes more like a disposable email. Similarly, if someone is not giving a proper mobile number and using a virtual phone number, VoIP number, which can be misused and cannot be used to track the location from where it is being operated, then it becomes suspicious. The next is social engineering scam. So social engineering scam, remember, here the emotions are getting triggered, and a big part of that is authority-based fear or some kind of fear, or so there'll be a sense of urgency there. So if someone is doing first time high value outward transfer, remember it is happening first time, then it becomes suspicious. And if customer is acting unusually fast and bypassing all the warning messages. For example, through net banking, where you'll have various pop-ups where banks will be giving some warning, which we normally take time to read, then we take time to press OK and then go to the next step. But here, the customer is unusually fast, not reading it, simply pressing OK, OK, and moving to the next step. Or if the payment is happening to known mule account or high risk account, it becomes suspicious. Or if there is a repeated transfer happening to same new beneficiary, that may be a case where there is a romance involved, which we discussed earlier. If there is a sudden liquidation of investment or FD and then money is being transferred urgently, that could potentially point to social engineering scam. So these are various examples as to what all we need to be watch out for. Or another example is elderly customer making urgent transfer, which is very unlikely because elderly customers normally they take time, they are slow, and there's no urgency for them. They read. But here, if it is urgent transfer, quick transfer by an elderly customer, it is a deviation. Next is employee fraud. This is the last category probably. So how do we detect, how can a bank try to identify if an employee is getting involved in fraudulent activity or supporting a fraudster, right? So if it is found that an employee is accessing various customers' accounts without any business need, right? Then it is suspicious. If employee is repeatedly overriding system alert, because if unknowingly an employee is doing something which he should not be doing, and if there is a system alert, a normal employee will read that warning and then not proceed with that activity. But if you have a bank employee who is supporting, that employee already knows that he is doing something wrong and he will override that warning. If it is found that same employee is handling various suspicious account, so in the past, if fraud has happened in 10 accounts, out of those 10, 6 are being handled by one employee, then it's a potential case of employee fraud. Or if employee is accessing system after office hours and looking at the customer accounts and approving something. And if there are patterns of exception approval. So basically, let's say there is a card limit or payment transfer limit. Okay. And employee is overriding that and providing some kind of exception approval and letting the transfer happens. And then it finally is found to be not approved by the customer. So those kind of exception approval which is done by employee, let's say exception approval for KYC, exception approval for loan, right? And finally those accounts or those loans, they become fraudulent. Then it's a potential case where employee might be involved in fraud. Okay, so the last one is network and link analysis. So some of the activities by itself within a single activity or within a single customer is not very suspicious, but when grouped together, it will clearly say that it looks very suspicious. So that is what link analysis or network analysis scenario identifies. So let's say it is found that a single device is being used across unrelated customers, or there is a common beneficiary across multiple accounts which are not related, or there is a circular fraud fund movement between multiple accounts, and there is a cluster of synthetic identity between those accounts, money is rotating. So far we discussed which are the interactions or activities could be suspicious. Okay. Now, one or more of these activities would together form a scenario. So for example, a scenario could be if there is a small transaction amount, say less than 150 rupee. Okay. And immediately after that, there is a large transaction of more than 70,000 rupees. And the time gap between those two is 10 minutes. Then it is a suspicious activity and you generate a alert, right? So scenario is basically um, detecting multiple suspicious activities, or rather fraud management solution is detecting multiple suspicious activity, and scenario logic based on the threshold parameters, it will decide whether to generate alert or not. Now let's look at, once a suspicious activity is found, what does fraud solution should do, or what does a solution does? Because remember, it's a real-time payment transfer which we are detecting, right? So one thing which can happen is, if you find first activity to be suspicious, then you send a warning message to the customer that this might be potential suspicious activity. You throw a pop-up, right? If pop-up is ignored, the second possibility is you can do step-up authentication. So bank can introduce that, you have to verify through OTP also, then you have to verify through your debit card numbers also. Or bank could put that transaction on hold and then give a call to the customer, or have relationship manager talk to the customer whether that particular transaction is actually being done by the customer, or it's a fraud. And it's possible that you can put temporary restrictions on high risk actions. For example, if you open an account and immediately next day you receive 1 lakh rupees in that, and third day you are trying to transfer that, then the bank can put a restriction that your transfer limit is 5,000 rupees for next 1 month, right? Because it's a new account, and it doesn't match with the profile of customer which is shared in the KYC. So that is all I wanted to cover in this particular video. Hope you found this video useful. Please provide your feedback in the comment. Have a nice day.